Hello, this is Avi Frister from Forex Trading Machine. We are now in the Cash Cow video tutorial number 2. Throughout this video I will go over a Cash Cow trade in detail. Again, like with video number 1, it is very important that you have read the Forex Trading Machine PDF ebook before viewing the video. You will have a much better understanding of the issues I will cover in the video. Okay, let's now dive into the first Cash Cow trade. The first element of a Cash Cow trade is a 140 plus pip move day. As we can see here, on the 2nd of March 2007, the market moved from a high of 1.9570, here is the high of the day, to a low of 1.9409. This is the low of the day. So we have a more than 140 pip move day, and this is element number 1 of the system, which has been fulfilled. So here we can see that the day opened and closed lower, making a 140 plus pip move, and established a low at 1.9409. We know this is a down day, obviously, since the open of the day is higher than the low of the day. So this is your guide of knowing if a potential trade will be a long or a short position. In this case, since the close of the day is lower than the open of the day, we know that if there is going to be a trade the next day, it's going to be a short trade. So again, this is day number 1, the 140 pip move day, the low 1.9409, and this is day 2. In day 2, we see a high of 1.9444. Okay, this is very important. Now, you do not have to know in hindsight. Obviously, you can't know you cannot know what will be the high of the day, but I cover that point very well on pages 125 and 126 of the course. So please, if you have not read that, so read it, and it will become a lot clearer to you what does it mean high and low of the day. Okay, so we know that the high is 1.9444, and we know that the market has to move 70 pips down in order for a potential trade to be triggered. So here the market moves to 1.9374, okay, which is 70 pips from 1.9444, and that is again 70 pips, and a short entry is triggered. Okay, but still remember there is the filtering element, which is the 30 pip rule. So we're going to have to see if the low of 1.9409 of day 1 is higher by at least 30 pips from the potential entry level. Okay, as we can see here, again, this is day 2, day 1. As we can see here, the short at 1.9374 is also 30 pips below the low of day 1. Okay? So we have two elements that have been fulfilled. The 70 pip move, which also contains the 30 pip rule. So we enter a short trade at 1.9374. We place our stop loss here at 1.9434, which is 60 pips above the entry, and we place a take profit or a limit order at 1.9274. Remember, that is 100 pips from the entry price. So the 100 pips was not reached on day 2. Sometimes it is, okay, but sometimes it's not. So in this case, we did not reach our profit objective until day 3. Now, this is very important. this 100 pips profit objective was reached on this day, on day 3, before 11:30 EST. If the 100 pips would have not been reached by this time, we would have exited at exactly 11:30 EST. Doesn't matter if it would have been an exit with a profit or a loss, but that is a time exit. Okay, this is the end of trade example number 1 of the Forex Cash Cow system. And in the next video, I'm going to cover another example of the Forex Cash Cow system. And thank you very much. Looking forward to seeing you in the next video. Bye bye.